If you are looking for a small business loan, no credit check, this video, you want to watch it from start to finish because I'll be sharing with you a few hacks that we have uncovered. Actually, 5 hacks that we have uncovered in the last 12 months, fresh hacks that will actually help you get approved right off the bat. And please, there is a formula. There is a formula for success when it comes to being approved for a business loan, no credit check. Now, the thing is that a lot of people are saying, well, can I really be approved for a business loan with no credit check? Yes, the answer is yes, but you got to follow a formula, okay? To each action in this life, there is a reaction. Learn to have the right actions in life so that you can have the proper reactions, the reactions that you want. So here are the steps I really want you to follow if you are trying to be approved for a small business loan, no credit check. The very first thing I want you to think about is to write a business plan. Boss, don't let people razzle-dazzle you trying to lie to you that you don't need a business plan. You do need a business plan. And I don't care what kind of industry you're in. I don't care what kind of niche you are talking about. You got to have a business plan. And I'm talking about a business plan is a fulcrum. It is the foundation of your business loan application, especially if you are asking the lender not to look at your credit when it comes to approving you, okay? So you got to have a business plan. I'm talking about having a business plan that has the proper financial projections, the proper industry outlook, the proper use of loan proceeds, like a business plan that can articulate the use of loan proceeds, the industry outlook, the competitive analysis, all this kind of stuff. Okay, and don't go on the internet trying to download a cheap ass template to sort of say, here's my business plan. How can you expect the lender to respect you, to have some kind of consideration for you, if you're not considerate enough for yourself to write a business plan? To have an original business plan. You can write it yourself, or you can have somebody write it for you. It takes about $100, $150. This is a good investment. If you are asking for a $50K or $100K or $250,000 in terms of business loan, no credit check, please be considerate enough to spend $200, $100 in a business plan, in a proper business plan. Okay, by the way, boss, welcome back to the show. It's really a pleasure to have you here, to have this quick convo with you about how to get approved for a business loan, no credit check. So the very first element that is integral in the approval process for a small business loan with no credit check is a business plan. The second thing I want you to do here is to look at your credit scores. And when we talk about credit score, we are speaking about your business credit score. So your personal credit score doesn't really matter here. It does matter, but it's not really important in this equation. What's important rather is your business credit score. Now, if you are a startup, let's say you're a startup, you just started like yesterday, and you're fresh out of the oven. You don't have a payday score. You don't have an Experian and Taylor score plus. That's fine. What you want to do is you want to really write the business plan anyway. But if you are an established business, that means what? That means that you really want to take a look at your payday score. You want to see whether you are like where you are at from a 0 to 100. Same thing you do it for your Dun & Bradstreet, your Equifax, and your Experian. So this trifecta is really important because in this economy, unfortunately, a lot of lenders are paying attention to stuff like that. I mean, even yesterday we were at the Los Angeles Times, the LA Times, was talking about the importance of credit worthiness for small businesses when it comes to things like SBA loans, when it comes to things like alternative loans. So it's becoming important. It's really becoming important. So take the time to actually go to Dun & Bradstreet and ask them to provide you with your business credit score. It might take you it might cost you $20, $30, $40, but it is a great investment. Okay. It is an investment in your own future, in your business's future. Take the time to acquaint yourself with your business credit scores so you have a clear idea where you are at. Okay. If you don't know where you are at, how can you fix stuff, boss? Talk to me about that. By the way, I want to quickly remind you of today's topic. I'm talking to you about how to get approved right off the bat for a small business loan, no credit checks. There are 5 things that I really want you to do right now so that you are being approved no matter what. So first thing is write a business plan. Number 2, you want to check and improve your business credit score. And when we talk about business credit score, we're speaking about there are primary elements. So primary element, that's the score itself. Okay, how quickly you pay, blah, 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 that kind of stuff. And then you have ancillary elements. So like I would say peripheral elements, like your relationships with vendors. So if you are having net 30 vendors, how do you actually maintain a positive relationship in terms of a payment history, in terms of the way you handle those vendors? How do you actually maintain a positive relationship with those vendors? Because everybody wants to have like net 30 vendor. I want to be approved for net 30 accounts. But once you get the accounts, what do? You can't even handle them. Not good, bad. Not good, boss. Not good at all. The third thing I want you to do, and this is a biggie. This is boy. This is a biggie. See, when we talk about financials, we're paying attention to one important element. That's profitability. And by profitability, I'm talking about revenue. I'm talking about cash flow, cash inflows. I'm speaking about profits. Okay. So which means what? It means that even though I know I talk about you have to do projections, you have to either have a projected financial statements or actual financial statements. Yeah, that's important. But among those four primary financial statements, there is one that really stands out. That's your statement of profit and loss. I mean, this is important, right? I mean, how much money are you making? And I'm not talking about you trying to say, well, my sales are up 15%. No, the lender wants to pay attention to the bottom line. So if you want the lender not to pay attention to your credit check, if you want to have a business loan, no credit check, you want to pay attention to your profitability status. I'm talking about your P&L, also called your statement of income statement. When you hear those words, they are interchangeable. They mean the same thing. So please, you need to have an income statement. And see, the thing is, sometimes people say, well, what if I'm not showing profits? If you're not showing profits, there's something called contextualizing the loss. Let's say you're having losses. Explain the loss. Talk to me about the loss. Talk to the lender about the loss. What really contextualized this loss? What really happened? Why the loss happened in the first place? Sometimes when you go to court, and people say that people know, the judge knows that you effed up, right? Something happened, you effed up, you did something bad, you transgressed, you had a transgression. There are something called circumstances. There are some contextual circumstances that can say, okay, you know what? This behavior, even though it's bad, something happens and this can explain the behavior in the first place. So you want to contextualize the loss. So you want to prepare, you want to articulate to the lender why you had the loss in the first place. Okay. So when you have losses, don't say, well, my ass is never going to have a small business loan, no credit check, blah, blah, blah. I'm just going home. I'm just going to eat like muffins for the rest of my life because I will never be approved. No, boss. You will be approved if you learn to actually articulate why you had the losses in the first place. And most importantly, what you're going to do to prevent those losses from occurring again, from reoccurring. That's the most important element you need to focus on. The next thing, if you are trying to be approved for, let's say you are trying to be approved for a no credit check business loan, is you really have to maintain something called going concern. Okay, so when we talk about going concern is actually an economic or accounting term that means your ability to maintain operational longevity. What does that mean? I'm using big words here. Let me just break it down for you, boss. So it means that you want to stay in business. You don't want to have bankruptcy. See, the thing is that if a lender is actually dubious about your going concern, it means the lender is like, you know what, this borrower might be out of business 3 months from now, 6 months from now. That's why you might be you are actually denied, not because the lender is like the lender is thinking that your credit score is kind of low, whatever, because the lender is not checking your credit score in the first place. But if the lender has some kind of doubts about your ability to maintain a going concern, to maintain a business, a proper business, and I'm talking about operationally, I'm talking about financially. If the lender doesn't have this sort of certainty, you will never going to be approved for a small business loan, no credit check, or any kind of business loan for that matter. If you cannot show proof of going concern. And how do you actually prove that you are going to be around 1 year from now, 3 years from now, whatever? Everything goes back to a business plan and to your financials. Those are two elements, okay? I mean, unless you have strikes from regulatory authorities, like you're having some kind of sanctions from authorities, those are the two things. Okay, so if you don't have any problem with the IRS, if you don't have any problem with the feds, we don't have any problem with the state authorities, the two things that you need to prove or you need to actually have a business plan, because a business plan by definition is really prospective, right? So you are looking forward. You're saying, this is where I want my ass to be, 5 years from now. This is where I want my business to be 5 years from now. You are explaining to the reader what the kind of plans and objectives and strategies you have for your business. This level of granularity, this level of in-depth analysis really, really reassures lenders. Okay. It really reassures lenders. And also, one thing I want to say here is that, so besides the business plan, you also have financial projections. So you want to articulate through the financial projections, or actual financial statements for that matter, you are trying to articulate a vision, a financial vision, a monetary vision for your business. Okay. You're trying to paint a picture of your business that hopefully is ideal, is amenable to the lender, so that you can be approved. The next thing I want you to really pay attention to is that we want to cover operational ratios. The thing is, when you talk about operational ratios, we're speaking about things like accounts receivable ratios, accounts payable ratios. We're speaking about debt to income ratios, whatever ratios are like relate to how you run your business. You want to maintain safe operational ratios. Now, it will be too long. It will be very lengthy in this conversation for me to elaborate on all the ratios you need to maintain when it comes to operational viability. So I'm not going to do that. We don't have time. But if you have questions, I will be very happy. My team will be very happy to explain those things to you. One thing I want to say here is that if you want to maintain viable operational ratios, one thing you want to pay attention to is your debt to income ratio. Your debt to income ratio, whether it is personal or business related, is a quintessential criterion for you to judge or to even gauge your own viability. Okay, so what does that mean? We're speaking in a foreign language here. Let me break it down for you. See, the thing here is that debt to income ratio tells the lender how much debt you currently have, how much money you're allocating to paying debts, and most importantly, whether you have enough bandwidth in your budget, enough room, enough leeway in your budget to take on additional debt. So if you're asking the lender to give you a business loan, no credit check, or with credit check, EIN only, whatever you want the loan to, whatever clothing you want the loan to feature, you need to show a low DTI. You need to show a low debt to income ratio. If you have a debt to income ratio that is above 30 to 35% or even 40%, that's even worse anyway, you will never be approved. You will never, your ass will never be approved. And again, don't let anybody lie to you. Don't let anybody razzle dazzle you, tell you, if you do this, if you do that, whatever. They're lying to your face. Now you can say, well, I'm not really sure. Maybe they're telling the truth. Well, you'll see anyway. I mean, we've been in this business for 30, 40 years. And we know, based on facts, based on experience, based on acumen, we have accumulated over 3 to 4 decades. We know the formula for success. And the formula for success is that you need to maintain viable operational ratios, starting with the DTI. You got to have a DTI that is low enough to give assurance to the lender that you are running a very tight ship. By the way, boss, let me remind you of today's topic. We're having a conversation about how to get the 5 things you want to pay attention to if you are trying to get a small business loan, no credit check. Okay, no credit check. This is really, really, really important. Let me give you a bonus here, okay? And the thing here is that when we talk about small business loans, no credit check, sometimes you got to think about, hey, listen, okay, I want to boost my chances of being approved. How do I actually do this? Well, son, daughter, uncle, aunt, dad, mom, grandpa, grandma, I'm talking to you. If you want to be approved right off the bat, you need to think about collateral. Sometimes it helps to actually put a little skin in the game if you are trying to really tell the lender, hey, listen, I want you to give me $100,000, and I'm here to actually I'm actually trying to risk something. I'm trying to collateralize the loan, or I'm collateralizing the loan partially or fully. See, the thing is, when people talk about collateralizing the loan, they think that they have to collateralize the whole loan. No. You can have an agreement with the lender. You can sit down and say, you know what, I have a list. I have listened to your I would say your domain, your requirements. Here is what I can do. I can provide collateral to sort of secure 50% or 60% or 75% of the loan. And for the rest, I want you to do it unsecured. This happens all the time in this country, okay? You don't have to have a 100% fully collateralized loan or 100% fully unsecured loan. No, you can do both. You can do something in between, okay? And there are all kinds of strategies and actions and tactics you can take to get the loan, to get your loan approved anyway. So the point I'm trying to make here is that sometimes it might help you to think about collateral. Think about collateral. And see, when you talk about collateral, please think about the quality of that collateral. Don't try to give the lender a crappy ass collateral that's not worth anything. Okay. For example, if you want to use a piece of equipment on your balance sheet as collateral, please appraise that piece of equipment and make sure that it has enough value, enough equity in it to actually serve as collateral. Okay. Please be considerate to the lender. If you're considerate to the lender will be considerate to you, and that consideration will translate into a higher loan approval. This is important. Let me give you a few pro tips before we close to this conversation. In this economy, a lot of folks are just like, what kind of industry should I invest in? Or lenders are kind of scared as hell about certain industries because, the economy is going down. They don't know if they will be able to recoup their investment because, see, when a lender approves your loan, it's an investment because that loan becomes an asset on the lender's balance sheet. Of course, to you, it is a liability on your company's balance sheet, but to the lender, it is an asset. They call it loan receivable. So when that loan becomes, let's say, due or uncollectible, it becomes a liability or also an expense. That's what they have to. The lender has to put something called allowance for uncollected accounts. So it becomes bad debt expense. So the point I'm trying to make here is what if you are trying to really increase your chances of being approved for a business loan, no credit check, make sure that you are able to understand your industry. Make sure you understand the trends that are happening in your industry, and you are able to articulate any negative trend going on in your industry. So what I'm trying to say is that, hey, listen, if you're lucky enough to be in an industry that is on a positive trajectory, on an upward trajectory, that's kind of fine. You don't have to do any explanation. Just sit around, sip some mojito, and just enjoy the ride. But if you happen to be in an industry that has some kind of negative downward trajectory, you'll have a lot of explanation to do. I'm not saying this is a bad industry. I mean, no matter how bad the economy is, you can still articulate why you believe that an industry is good because things happen. You can have yo-yos in the economy. The trends in your industry can follow a certain yo-yo path, whatever. That's fine. But your ability to explain, your ability to contextualize, the ability to provide a framework, like an analytical framework around what's really happening in the industry, and be able to explain to the lender that, hey, listen, even though there is a lot of stuff happening right now, the industry still has potential. If you're able to articulate that to the lender, boss, I'm telling you, you are going to be approved no matter what. Okay, so when I'm talking about actually your industry matters, I'm talking about a couple of things that will show the lender that, hey, listen, your industry is on a positive path, even though temporarily it's actually suffering right now. Okay, so we're talking about you having a business plan, of course. You actually making sure that you talk about the references that you have in the industry, the professional references, the kind of banking references you have, the banks that are behind you. Okay, business licenses and permits, some reports. If there have been some articles about your industry, if there have been some trends, like some reports about your industry, anything that consultants have actually published about your industry, anything publicly available about your industry that is positive, please, you want to show this to the lender. And the whole idea is to show the lender that, hey, listen, even though you believe the industry is temporarily going down, actually the long-term potential of this industry is still positive. So if you are able to articulate that sort of analysis to the lender, you are going to be approved no matter what. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about 5 things that will really help you get a small business loan with no credit check real fast, no questions asked. And so business plan, business credit score, annual revenue, profit, profitability, going concern, operational ratios, and I give you a few bonus, like a bonus tip, and overall a few pro tips about the industry. Thank you. God bless you. I'll speak to you another time, but until then, remember, stay marvelous.